Hello. So this video is about analyzing transactions. So analyzing transactions is step 2 in the accounting cycle. I have not introduced the accounting cycle yet, but I start telling them that we will learn an accounting cycle, and analyzing transactions is step 2 in the accounting cycle. So I have them write that in their notes so that they will have that to reference later. So analyzing transactions, this process that I'm about to teach is not in the textbook, but it's how I learned it when I learned accounting in college, and this is how I teach it to my students, and it's been very successful over the years, so I'm going to teach it to you. So I call this the analyzing chart. So when they write this in their notes, they label this the analyzing chart. So I always tell them when you are getting ready to do a transaction, analyze a transaction, you always draw the analyzing chart. They need to memorize this chart. But if you make them use this chart for every transaction, every single transaction, up through till you get to the point of posting, they'll have it locked down. And they'll get tired. They'll say it's tedious. They'll say it's, oh my God, it's boring. It's so long. And it is long. But the repetition of it is what will make it stick in their minds. Write the chart, fill it in until you feel comfortable that everyone has it. So at the beginning, I make the analyzing chart required. It's part of the assignment. So it's not enough that they just know what accounts to debit and credit. They must also do the chart. It's a whole other assignment, or it's part of the original assignment. And when they take tests and quizzes, they must use the analyzing chart on their scratch paper. That's a requirement. And then when I feel that they're comfortable, I start making it optional, but highly recommended, and to always use it on tests and quizzes, even if they feel comfortable. I recommend they always use it because accounting is tedious. It causes your brain to work very hard, and if your brain gets tired, you start making careless mistakes. So I encourage them to think on paper. Think on paper. If you think on paper, you don't have to rely on your mind so much to remember because you've put it on paper and you can reference the paper. So those are things I say to my students over and over and over again. So we're going to learn how to use this analyzing chart. So the first column is the transaction number. Typically, it's a date. So in order for you to be able to keep track of their work and for students to keep track of their work, I always have them put the transaction number or the date of the transaction, depending on how the problems are written, so that you can easily track which transaction they're analyzing. The next column is the account name. The account's name comes from the chart of accounts. Chart of account on page 3, chart of accounts that's in the problem. Chart of accounts is often abbreviated as COA in Applia, our digital workbook. So always have them look for a chart of accounts when they're getting ready to analyze a transaction. So either use the chart of accounts on page 3, which is what we'll use for these problems, or look for the chart of account in the problem. The next is the accounting equation. So every transaction impacts the accounting equation. Assets equal liabilities plus owner's equity. So you would place in the accounting equation column which part of the accounting equation has been affected. Is it assets? Is it liabilities? Or is it owner's equity? The next column is the normal balance. What is the normal balance of the account? Is it a debit or a credit? Then the plus or minus column is, do we have more or less of this account based on this transaction? So this is the more or less column, more or less. Then we have the change column. So the change column is based on the more or less column. So the change will be filled in with a debit or a credit. Do we have more or less of this transaction. And then the last part is the actual journal entry that we will write. So you would write the name of the account that is debited and the name of the account that is credited based off of how you analyzed it. So this column is based on this column. This column is based on this column. The normal balance is based on this. And this information comes from the transaction itself, reading the transaction. Okay. So I usually teach them how to use this chart by asking themselves questions. So I usually go through as I explained it, and I tell them what questions do they ask themselves as they read the transaction. So we're going to start with transaction on page 36 in the textbook, on page 36 in the textbook. And the transaction number or the transaction date is January the 2nd. So we're on page 36 in the textbook. So I'm going to write that here for our reference, page 36, and the transaction is January 1. Okay, so page 36, January the 1st is the date. So the transaction reads, and I usually have several students read the transaction, and I also repeat it because they need to understand it's very important for them to read the transaction more than once in order to analyze it. So the transaction reads, received cash from owner as an investment. Received cash from owner as an investment. So right here at this moment, I teach them a new thing to add to their memorization. When they hear the word investment, investment always equals capital. So I'm going to write that here, and they need to write it in their notes and lock it in. When we hear investment, investment always equals capital. Investment always equals capital. Investment equals capital. Okay? So an investment means that the owner or someone has given the company money to just put in the company. The company is gaining money through no sales at all. They're just given money to help their business. So it could be the owner took money out of their savings and put it in the company. That's an investment. The owner's mama gave them money to help their business. That is an investment. That's money going into the company, not from sales. So in our business, we're selling some type of product or service in order to make money. When it's an investment, there are no sales. We're just putting cash into our company. Cash into the company. That is an investment. Investment equals capital. Okay? So I'm going to read the transaction again. Received cash from owner as an investment, $2,000. Okay? So let's analyze this transaction. So we'll break it down. Received cash. So in every transaction, there are always two accounts affected. Always two. It can be more than two, but not less than two. So at least two accounts are always affected. So if I received cash, cash is one of the accounts that is affected. Cash is an account that is in the chart of accounts on page 3. So my first account I'm going to write is cash. So then what is the other account that's affected by this transaction? Remember, there's always two accounts affected. So in this first column, name of account, we ask ourselves, what are two accounts that are affected by this transaction? The first one is cash. We received cash he received cash from owner as an investment. Cash from owner as an investment. So we have an investment, so our other account is capital. Okay, so the two accounts affected by this transaction is cash and capital. Two accounts. Always two. It can be more than two, but not less than two. Minimum of two. The next one is the accounting equation. The question you would ask is, where do these accounts fit into the accounting equation? Is this account an asset, liability, or owner's equity? So cash is an asset. So, all right, assets. Capital is capital asset, liability, or owner's equity. Capital, asset, liability, or owner's equity. Capital is owner's equity. Okay, so we have our two accounts that are affected. So now, we have our two accounts that are affected and where they fit into the accounting equation. So next, what is the normal balance? What is the normal balance of cash? Cash is an asset. The normal balance of asset is a debit. Capital is owner's equity. Normal balance of owner's equity is credit. All right. So now we have the normal balance. The next column, the plus or minus column, says, do we have more or less of this account based on this transaction? Do we have more or less of this account based on this transaction? So I have received cash from owner as an investment. Received cash from owner as an investment. So do I have more or less cash in this transaction? And the answer is more. So I put a plus because we have more cash. More cash. Do I have more or less capital based on this transaction? And the answer is more. We have more capital. So now we move over to the change column. So if I have more, I put a plus. If there's a plus here, that means we keep the same normal balance because normal balance means how an account is increased. So plus means to increase in mathematics. So if we have more of this account, we keep the same normal balance. So in this case, it is debit and credit. We keep the same normal balance because we have two pluses here. So when we have that, we go back to what our accounts are. And what account do I debit for my journal entry? It's going to be cash. So I will debit cash and I will credit capital. Okay. So let's do another one. On page 37, there is another transaction. This one is for January the 2nd. So we're going to write here for our reference, page 37, January the 2nd. And this one is paid cash for supplies, $165. So the next transaction is paid cash for supplies, $165. So we do it all again. So if I paid cash for supplies, what are my two accounts that are affected? What are my two accounts that are affected? I paid cash. So we know cash is affected. And I paid cash for supplies. Supplies is an account in the chart of accounts. So supplies is affected. Need to stress to them that we do not use the expense. Do not use the expense account. It is supplies, not supplies expense. Most of the time in a transaction, the word expense will actually be used in the transaction, in the problems when using expense account. When it says supplies, it is the supplies account, not supplies expense. Okay? So the two accounts affected here is cash and supplies. So what type of account is cash? Cash is an asset. Cash is the ultimate asset. What type of account, where does the account supplies fall into the accounting equation? That would also be an asset because supplies are things that we could sell later for money. So supplies is an asset. You can also remind them when they look at the chart of accounts on page 3, all the accounts are grouped according to the accounting equation. So what is the normal balance of an asset? It is debits. And these are both assets. So now we get to the plus or minus. Do we have more or less of the asset? More or less? So based off this transaction, pay cash for supplies. Do I have more or less cash? Well, if I paid cash, that means the cash went out. So I have less. So that's a minus. If I paid cash for supplies, that means I have supplies. That means I receive supplies. So that means I have more supplies. So that's a plus. So if there's a minus here, that means that I do the opposite of the normal balance. Opposite. So minus, this will become a credit in the change column. This is a plus. We do the same. So this is a debit. So now we get to our journal entry column and we look to see which accounts do we debit and credit based off of this column. This column tells us what we should do based off of this column. So which account do we debit? We always do debits first. We debit supplies and we credit cash. Debits come first. We start teaching that. Debits first. Debits first. Always write debits first. So we've analyzed that transaction. Let's do another one. So on page 38, we have paid cash for insurance. Paid cash for insurance. So this is another concept that we're going to introduce them to. That when they see the word insurance, that is always prepaid insurance. Okay? So they see insurance in a transaction, that is always going to be prepaid insurance. Prepaid insurance. Okay? When they see insurance in an asset, that is always going to be prepaid insurance. So we're going to solve this problem, analyze this transaction. This is on page 38 in the textbook. And this is January the 3rd. Okay? So remember, we have our students read the transaction multiple times. Have different students read it. You read it. Let them hear the transaction. This is important during this process that we really take the time to break it down. All right. So it says paid cash for insurance, $900. Paid cash for insurance. So we've already wrote the transaction number and date. So what accounts are affected? Paid cash for insurance. So if I paid cash, cash is affected. Paid cash for insurance. Insurance is always prepaid insurance. Prepaid insurance. So it is prepaid insurance. Okay. So at this point, I start letting them know they can start abbreviating. So for the account equation, they can write A for asset, L for liability, OE for owner's equity. Okay, so where does cash fall into the account equation? It is an asset. Prepaid insurance is also an asset. So I take time to explain this to them that prepaid insurance is insurance that we purchase ahead of time. So I may have paid $900 for 9 months of insurance. So insurance is only used when the month comes. So it is prepaid because I paid ahead of time, meaning if I change my mind, I can get my money back, which is why it's prepaid and it's an asset, because if I can get money from it, that makes it an asset. So prepaid insurance is an asset. And you'll also see it under assets in the chart of accounts. So what's the normal balance of an asset? It is debit. Do I have more or less cash based on this transaction? It is paid cash for insurance, $900. Paid cash for insurance, $900. So I paid cash, so that is less cash. Okay? Paid cash for insurance. So that means I have more insurance. So that is a plus. So if it's a negative sign here, that means I have less of it. So I do the opposite of the normal balance. So this will be credit. So I have a plus here. So I do the same as the normal balance, which is a debit. So now we're in the journal entry section. So now which account do we debit? Based off this, we debit prepaid insurance and we credit cash. Okay. So that is how we analyze these transactions. Thank you.